For decades, California was the ultimate prize. It was the land of eternal sunshine, the tech gold rush, and the American dream on steroids. If you owned property here, you weren't just a homeowner. You were an investor sitting on a winning lottery ticket. But in 2025, that dream is turning into a financial prison. We are witnessing a slow-motion collision that the mainstream news is trying to ignore. It's not just about high interest rates. It's about a state that has become uninsurable, unaffordable, and unlivable for the middle class. While the rest of America worries about a recession, California is facing something worse: a total market freeze. Major insurers are fleeing, the tech giants are downsizing, and for the first time in history, more people are packing U-Haul trucks to leave than are coming in. Is this just a dip? Or is this the start of a catastrophic correction that will drag the entire U.S. economy down with it? Welcome to Stateside Tactics. Today we expose the truth about the California crash. Let's start with the silent killer. The one factor that makes California's housing market fundamentally broken compared to Texas or Florida: insurance. You cannot get a mortgage without home insurance. It's a requirement. But what happens when the insurance companies simply leave? State Farm, Allstate, Farmers. The giants of the industry have either stopped writing new policies or massively hiked their rates in California. Why? Because the risk of wildfires, combined with state regulations that cap how much they can charge, has made California unprofitable. I want you to understand the math here. If you are buying a home in San Diego or the Sierra Foothills, your insurance quote might not be $200 a month anymore. It could be $800. Or worse, you might be forced onto the FAIR plan, the state's insurer of last resort, which offers less coverage for triple the cost. This destroys affordability. If a buyer has to pay an extra $1,000 a month for insurance, that is $1,000 less they can pay for your mortgage. This forces home prices down. But it gets worse. If you are selling a home and the buyer cannot find insurance, the deal falls through. We are seeing escrow closings fail across the state, not because of the buyer's credit, but because the house itself is uninsurable. Economics 101 teaches us that prices are determined by supply and demand. For 50 years, demand for California was infinite. Everyone wanted to live here. But look at the data now. California has lost population for 3 consecutive years. The California exodus is real. But who is leaving? It's not the billionaires, and it's not the very poor. It is the middle class and the upper middle class, the exact people who buy homes. Remote work broke the golden handcuffs. If you can earn a Silicon Valley salary but live in Nevada with 0 income tax and a mortgage that is half the price, why would you stay in San Francisco? You wouldn't. San Francisco is the epicenter of this collapse. Commercial real estate there has already crashed. Office buildings are selling for 60% off their previous value. And history tells us that where commercial real estate goes, residential real estate follows. When the businesses leave, the workers leave. When the workers leave, the housing market dies. Now, combine the exodus with the interest rates. The median home price in California is still hovering around $800,000. In the Bay Area and LA, it's over $1 million. At a 3% interest rate, a $1 million loan was manageable for a high-income family. At 7%, the monthly payment nearly doubles. To afford the average home in California today, you need an annual household income of nearly $200,000. Less than 15% of Californians make that kind of money. This is the affordability wall. We have hit a mathematical limit. Sellers are stubborn. They are holding on to their 2022 prices, refusing to believe the party is over. But buyers literally cannot qualify for the loans. This standoff leads to one thing: stagnation followed by a drop. Inventory is piling up in areas that used to be hot. Price cuts are becoming common. The days of bidding wars and 20 offers over the asking price. In most of California, those days are gone. So, is the crash here? In real terms, yes. If you adjust for inflation, California real estate is losing value every single day. If you are thinking of buying in California right now, you are catching a falling knife. You are buying into a market with declining population, rising insurance premiums, and an economy that is hostile to the middle class. The sunshine is still free, but everything else will cost you your future. Unless you have unlimited cash and don't care about insurance risks, California is a sell market, not a buy market. The smart money is looking elsewhere. They are looking at states with growth, stability, and sanity. California may bounce back one day, but the correction has only just begun. This is Stateside Tactics. Analyze the data, ignore the hype. I'll see you in the next one.